Welcome to our channel Money Minded Online, the podcast where we explore the best strategies, tools, and stories for making money online. Whether you're an aspiring entrepreneur, a seasoned hustler, or just curious about how to thrive in the digital economy, you're in the right place. Each week, we bring you actionable insights, inspiring interviews, and proven tactics to help you build wealth online. So sit back, take notes, and get ready to transform your future. Let's dive in.
Hey there. You know, when it comes to building long-term wealth, real estate's always up there.
Oh, yeah, for sure.
But with like a zillion different ways to invest,
Right.
it's kind of overwhelming,
Right.
you know? Where do you even start?
Yeah, it's definitely not one size fits all.
Exactly. So to help us break it all down, we found this podcast called Top 5 Real Estate Investment Strategies for 2025.
Okay.
We're going to dive into each strategy, figure out what makes it unique, the pros and cons, the whole 9 yards.
Sounds good.
Really get you thinking, is this the right move for me? You know?
I like it.
All right, so the first strategy they talk about is investing in short-term rentals.
Yeah, the Airbnb and Vrbo world.
Exactly. It's huge right now with so many people working remotely and just that whole travel bug going around.
Definitely a hot topic.
Right. And I mean, think about it. You could turn that spare room or even your whole property into a cash flowing machine.
For sure.
But I'm curious, with all the hype, are there any downsides we should be aware of?
Well, location is everything. You got to think tourist destinations, vibrant cities that are attracting all those remote workers.
Right.
Those are your sweet spots. But before you get too excited, you have to check the local regulations.
Oh, yeah, that's right. I've heard about places like Santa Monica, I think limiting how many nights you can rent out a place.
Exactly.
What other kinds of regulations are we talking about?
Well, some cities require licenses to operate a short-term rental, and then others have started imposing stricter zoning rules.
Wow.
In New York City, for instance, there are tons of buildings where short-term rentals are totally banned.
Seriously?
Oh, yeah. So you can't just assume you can list your property anywhere you want. Do your homework before you invest.
Got it. Location legalities check. What else is essential for success in the short-term rental world?
Well, think of it like running a mini hotel.
Okay.
Presentation is everything you need, top-notch staging to stand out online, and then, of course, keeping up with cleaning and maintenance.
Yeah, you got to keep those reviews positive.
Exactly. Positive reviews are gold, and those come from providing an amazing guest experience.
Makes sense. So short-term rentals, high reward potential, but definitely not passive income.
Sure.
Now, for those of us who aren't quite ready to become the ultimate host, the podcast's second strategy might be more appealing: REITs, or real estate investment trusts.
REITs.
Yeah. Have you ever invested in REITs?
A little bit.
Yeah, tell me about it.
Well, they offer a way to tap into real estate's potential without the hands-on hassle of property management.
Okay, yeah, that sounds less stressful.
Think of it like buying stock, but instead of a company, you're investing in a portfolio of income-generating properties.
Oh, okay. I'm starting to click.
Yeah.
And I remember from the podcast that REITs actually have to distribute a large chunk of their profits back to shareholders, right?
Exactly. That's one of the big perks. Legally, REITs must pay out at least 90% of their taxable income as dividends.
Interesting. So you're looking at a potentially consistent stream of passive income. Now, if someone were to jump into the world of REITs, are there any specific sectors that are looking particularly strong for, say, 2025?
Well, according to the podcast, healthcare, logistics, and data centers are all poised for solid growth.
Those are interesting.
And it makes sense when you think about the bigger picture.
Yeah.
The aging population means greater demand for healthcare facilities. E-commerce is fueling the need for more warehouses and distribution centers.
Right?
And our reliance on data and cloud computing is just exploding.
Yeah, that's not going away anytime soon.
Nope. So that drives up demand for data centers.
So REITs could be a smart way to ride the wave of those larger trends without actually having to buy a hospital or a warehouse.
That's the idea.
Plus, the podcast mentioned that you don't need a ton of money to get started, right?
Right. Unlike buying a property, you can start investing in REITs with a relatively small amount of capital, often just a few $100s.
That's really appealing. Okay, on to strategy number 3. And this one is perfect for our first-time buyers out there. House hacking. Now, I have to admit, when I first heard this term, I pictured some tech whiz breaking into security systems.
Yeah.
But it turns out it's way less James Bond and much more financially savvy.
Yeah, no hacking required. House hacking is all about turning your own living space into an investment.
Okay.
You buy a multi-unit property like a duplex or triplex.
Right.
You live in one unit and rent out the others.
I see.
The beauty is the rental income helps to offset and sometimes even completely covers your mortgage payments.
So you're basically getting your tenants to help you buy your own house. Genius, especially when you're starting out and maybe don't have a ton of cash flow. But what if you can't swing buying a multifamily property right off the bat? Is there still a way to tap into this house hacking magic?
Absolutely. Even if you own a single family home, renting out a spare room can achieve a similar effect.
Smart. And I'm guessing there's more to it than just the financial upside. I imagine sharing your living space with tenants could create a sense of community as well.
You're on the right track. A lot of house hackers find that they build strong connections with their tenants,
Yeah.
creating a real sense of community within their own homes.
Cool.
It's not just about making money, it's about building relationships and maybe even fostering a more affordable housing option in your area.
Okay, house hacking, definitely adding that to my list of things to research further. But let's say you're ready to play in the big leagues of real estate investing. The fourth strategy the podcast covers is real estate syndications and crowdfunding.
Okay.
Now we're talking about pooling your resources with other investors to tackle those larger scale projects, apartment complexes, office buildings, even hotels.
Right. Ventures that would be out of reach for most individual investors.
Right. And it seems like platforms like Fundrise, CrowdStreet, and Realty Mogul have made this whole world so much more accessible to the everyday investor.
Yeah.
It's pretty amazing to think you can potentially own a piece of a skyscraper with just a few clicks.
Yeah, technology is crazy.
But I imagine there are some important caveats here.
Definitely. First, patience is key.
Okay.
Syndications and crowdfunding are long-term games. Unlike flipping a house or even managing a rental property, these projects can take years to yield returns.
So it's not a quick flip for a profit kind of scenario.
Not at all. And there's another crucial factor, due diligence. It's paramount to thoroughly research the track record of the syndication sponsor or the platform you're considering.
Makes sense.
You need to understand their history, their success rate, and their fees.
Okay, so it's not just about picking a cool sounding project. You need to really dig deep and understand who's running the show. But what about the red flags? What are some warning signs that should make investors hit the pause button?
That's a great question. One major red flag is lack of transparency.
Okay.
If a sponsor or platform is hesitant to share detailed information about the project or their own background, that's a big signal to proceed with caution.
So transparency is key. What else should investors be wary of?
Unrealistic promises of sky-high returns are another big no-no. If it sounds too good to be true, it probably is.
Good point.
And always scrutinize those fees. Excessive or hidden fees can really eat into your profits.
Got it. Syndications and crowdfunding, high potential, but only with a healthy dose of research and caution. All right, for our fifth and final strategy, we're taking a look at what the podcast calls value-add properties. Now, this one sounds like it's right up my alley. I love a good fixer-upper story.
It's a bit like a fixer-upper on steroids. Value-add properties are all about finding those diamonds in the rough properties that need some TLC, some vision, and some strategic upgrades to unlock their true potential.
So we're not talking about just flipping a house. This is about holding onto the property and making it shine right.
Exactly. The goal is to boost the property's value through strategic improvements, so you can charge higher rents or sell for a nice profit down the line.
Okay, I can see the appeal here. But I imagine there are some potential risks. Like, what if those renovations spiral out of control and end up costing way more than expected? Or what if the market takes a dip after you've poured all this money into the property?
Those are definitely important considerations. To mitigate those risks, it's crucial to have a rock-solid plan and a realistic budget going in.
Right.
Partnering with experienced contractors who can deliver on time and within budget is essential. And keeping a close eye on market trends will help you anticipate potential shifts and adjust your strategy accordingly.
So value-add properties, high potential for reward, but also requiring a good deal of expertise planning and market awareness. Wow, we've covered a lot of ground already. 5 very different strategies, each with its own unique set of advantages, challenges, and considerations.
And that brings us to a really crucial point. Figuring out which of these strategies aligns best with your individual goals, your risk tolerance, and the level of involvement you're comfortable with.
Exactly. There's no one right answer. So for those of you eager to take the next step, we'll be back in part 2 of this deep dive to explore each strategy in even more detail. We'll equip you with even more knowledge and actionable insights to help you navigate this exciting world of real estate investing. Stay tuned.
Welcome back to our deep dive into the top real estate investment strategies for 2025.
Yeah, we're picking up right where we left off, ready to give you even more knowledge to make those smart investment decisions.
Exactly. In part 1, we gave you that overview of the 5 key strategies from that podcast we found. Now let's zoom in on each one. Explore the nuances, the practical considerations.
Okay, I like it.
That can make all the difference.
Sounds good to me. Let's start with those short-term rentals. We talked about the potential for higher returns and the importance of location and regulations, but what about the day-to-day realities of managing a short-term rental? It seems like it could be quite demanding.
Yeah, for sure.
Is it even feasible for someone with a full-time job to handle all of that?
That's a great question.
Yeah.
It really depends on your bandwidth and how hands-on you want to be.
Right.
Some people thrive on that constant hustle. Managing bookings, cleaning, communicating with guests. It's almost like running a small hospitality business.
Yeah.
But for others, that can be way too much.
Right. It's not exactly passive income. So what's the alternative for those who want those potential rewards, but not the constant to-do list?
Well, that's where property managers come in.
Oh, yeah, that's right.
There are companies that specialize in handling everything for short-term rentals, from marketing and guest inquiries to cleaning and maintenance.
Okay.
They basically take care of the day-to-day, and you get a cut of the profits.
Makes sense.
Of course, that means less profit for you overall, but it could be worth it for the peace of mind and the time saved.
That makes sense. So short-term rentals can work for different lifestyles as long as you're strategic about it. Okay, moving on to REITs. We talked about their liquidity and dividend payouts. But are there any potential downsides investors should be aware of? I mean, every investment has its risks, right?
Of course. One thing to consider with REITs is their sensitivity to interest rate changes.
Okay.
When interest rates rise, REITs can become less appealing to some investors, and their share prices might dip as a result.
So it's not just about looking at the potential dividends. You need to keep an eye on those broader economic factors too. What else should investors keep in mind when considering REITs?
Well, another thing to remember is that with REITs, you're not directly controlling the properties.
Right.
You're trusting the REIT's management team to make smart decisions and generate those returns. So it's crucial to do your research on the REIT itself.
Okay.
Understand their management style, their track record, their overall investment strategy.
So just like with any investment, due diligence is key. All right, let's shift gears to house hacking, which we touched on earlier as a great option for first-time buyers. I love the concept, but I'm curious about the practical side of things. What are some key considerations for someone thinking about taking the plunge into house hacking?
Well, one of the biggest things is to be honest with yourself about your comfort level with sharing your living space.
Yeah, that's fair.
House hacking means you'll have tenants living pretty close by.
Right.
So setting boundaries and clear expectations from the start is super important.
That's a good point. It's not just about finding a cool property, it's about finding the right people to share that property with. And aside from the personal dynamics, I imagine there are some legal aspects to consider as well.
Absolutely. You'll need to be familiar with all the local landlord-tenant laws to make sure you're playing by the rules.
Right, of course.
Things like security deposits, lease agreements, handling maintenance requests. It's all part of being a responsible landlord.
So you're not just getting a roommate. You're running a small business, even if it's just a couple of units. Okay, on to syndications and crowdfunding. We discussed the importance of due diligence earlier, but what are some specific questions investors should ask when evaluating potential projects or platforms?
When it comes to syndications, the sponsor's experience and track record are crucial.
Okay.
How long have they been in the game? What's their history of successful projects? You want to partner with someone who knows what they're doing and has a proven track record of delivering returns. Don't be afraid to ask for references or case studies from past projects.
Right. Past performance isn't a guarantee of future success, but it definitely gives you a better sense of who you're dealing with. What about the financials of the project itself? What should investors be scrutinizing?
The project's pro forma is your roadmap to potential success.
Okay.
It outlines projected income, expenses, and returns, so make sure those assumptions are grounded in reality. Dig deep into things like projected vacancy rates, operating expenses, and how well the project can cover its debt obligations. If something seems off or overly optimistic, ask questions. Don't just take their word for it.
Okay, so it's not just about trusting a fancy spreadsheet, it's about understanding the assumptions behind those numbers. Now, when it comes to crowdfunding platforms, what should investors prioritize in their due diligence?
Look for platforms that have a really solid vetting process for the projects they list.
Okay.
Transparency is key.
I like it.
Choose platforms that provide tons of information about each project. The sponsor's background, detailed financials, all the investment terms. The more information you have, the better equipped you are to make an informed decision.
And of course, fees. We talked about how they can vary widely between platforms. What's a reasonable fee structure to expect, and how do you avoid getting nickel and dimed?
Good point. It's definitely something to watch out for. You'll typically see a combination of upfront fees, annual management fees, and a percentage of profits that goes to the platform. There's no magic number, but compare fee structures across different platforms to make sure you're getting a fair deal. If a platform is super vague about fees, that's a red flag.
Okay, so transparency and reasonable fees are key. All right, finally, let's dive into those value add properties. We know it's all about finding those hidden gems with untapped potential and then using strategic improvements to boost their value. But where do you even begin to find these diamonds in the rough?
You've got to be a bit of a detective. Networking with local real estate agents is a great start.
Okay.
They often know about properties that aren't even listed yet.
Right.
Attending property auctions can also be a goldmine for finding undervalued properties.
Interesting.
And don't underestimate the power of good old-fashioned online listings. Just be prepared to dig deep and look beyond those perfectly staged photos.
So it's about seeing the potential that others might miss. But how do you determine if a property is a worthwhile value-add opportunity?
Market research is your best friend here. Analyze comparable properties in the area to get a realistic sense of what the property could rent or sell for after you've made those improvements.
Okay.
Factor in your estimated renovation costs, holding costs like property taxes and insurance, and any financing expenses. If the numbers add up and you can envision a clear path to profitability, then you might have a winner.
Okay, so a lot of due diligence and number crunching is involved. And I imagine having the right team in place is crucial for this type of strategy.
Absolutely. A skilled contractor who understands your vision and can deliver quality work on time and within budget is essential. And don't skimp on a thorough inspection before you buy. Uncovering any hidden problems early on can save you a lot of headaches and unexpected expenses down the road.
It sounds like value-add properties require a lot of expertise, but they also offer a lot of creative control and potential for those who are willing to put in the work.
Exactly. It's not for the faint of heart, but it can be incredibly rewarding. Now, we've covered a lot of ground, but remember, this is just the tip of the iceberg. Real estate investing is a vast and ever-changing landscape.
Right. And everyone's financial goals, risk tolerance, and the level of experience are different. So it's impossible to say definitively which strategy is best.
Exactly. But by understanding the nuances of each strategy and carefully considering your own circumstances, you can start to narrow down the options and identify the path that aligns best with your investment goals.
And that brings us to the end of part 2 of our deep dive. But don't go anywhere. We'll be back in part 3 to explore some common pitfalls to avoid and share some final words of wisdom to set you on the path to real estate investing success. Welcome back to the deep dive. We've explored so many different real estate investment strategies, from those short-term rentals to REITs house hacking, all that good stuff. But before we wrap up this whole journey, I think it's really important to talk about some common pitfalls that new investors often stumble into.
For sure. It's easy to get caught up in the excitement.
Oh, totally.
But you got to go in with your eyes wide open.
Right. So let's talk about those potential stumbling blocks. What are some of the biggest mistakes you see new investors making, and how can our listeners avoid falling into those traps?
One of the most common mistakes is jumping in without a clear plan.
Okay.
Or a solid understanding of the market.
Yeah.
Real estate's not a get-rich-quick scheme.
Right.
It takes planning, research, and a long-term perspective.
So it's not just about finding that hot property and hoping for the best. You need to have a strategy, a budget, a realistic understanding of the market.
Exactly. Another common pitfall is overpaying for a property. It's easy to get caught up in the emotion of it all, especially in a competitive market.
Oh, I can see that.
But remember, numbers don't lie.
Right.
Stick to your budget, do your due diligence, and be willing to walk away if a deal doesn't feel right.
It's hard, though, when you get excited about a property.
Oh, no.
Emotions can definitely cloud your judgment. So always run the numbers carefully and make sure that investment aligns with your overall financial goals.
That's great advice. And speaking of numbers, another mistake is underestimating the true cost of real estate investing. People focus on the purchase price, but forget about all those other expenses that can really add up.
Right. It's not just about the down payment and the mortgage. You've got closing costs, property taxes, insurance maintenance, potentially even vacancy costs.
Exactly. Failing to account for those hidden costs can really throw a wrench in your plans.
Yeah, for sure. And something else I've heard about too is like people not really thinking about the time commitment involved,
Oh, yeah.
especially with something like a rental property.
Big time.
It's not just about collecting rent checks.
Nope. You got to be prepared to deal with tenant issues and maintenance requests, all that fun stuff.
So true. And finally, a mistake I see time and time again is neglecting due diligence. Whether you're buying a rental property, investing in a REIT, participating in a syndication research is your best friend.
Always do your homework.
So don't just take someone's word for it or rely on those glossy brochures. Dig deep, ask tough questions, and make sure you're completely comfortable with the investment before you commit your hard-earned money.
Couldn't agree more. Now let's shift gears a bit and talk about some key takeaways to help our listeners navigate this exciting world of real estate investing.
Sounds good. What are some parting words of wisdom you want to leave our audience with?
First and foremost, remember that real estate is a long game.
Okay.
It's about building wealth steadily over time, not chasing quick flips or overnight riches.
Patience is key.
Patience, persistence, and a willingness to learn and adapt.
Love it.
Those are essential qualities for success.
So don't get discouraged if you don't see those immediate results. Stay focused on your long-term goals and keep that growth mindset going.
Absolutely. Another crucial piece of advice is to build a strong network of trusted advisors.
Oh, yeah?
Connect with experienced investors, real estate agents, lenders, other professionals who can offer valuable insights and guidance.
Yeah, the real estate world is all about relationships.
It absolutely is. Those connections can open doors to opportunities you might never find on your own. And finally, never stop learning. The real estate market is constantly changing, so stay curious, attend industry events, read books, listen to podcasts.
Right. Keep learning.
The more knowledge you have, the better equipped you'll be to make smart decisions.
Knowledge is power, especially in the world of real estate. Well, that brings us to the end of our deep dive into the top real estate investment strategies for 2025. We've covered a lot of ground, from understanding the nuances of each strategy to identifying potential pitfalls and highlighting key takeaways for success.
It's been a pleasure.
Yeah, it's been awesome having you here. Thanks for sharing your expertise.
Happy to be here.
We hope you found this deep dive informative and empowering as you continue to explore this exciting world of real estate investing.
Good luck out there.
Until next time, happy investing.
Thanks for tuning into our channel Money Minded Online. If you found value in today's episode, don't forget to hit the like button, subscribe, and turn on notifications so you never miss an update. Share this episode with friends who are looking to make money online and join the community. Drop a comment below with your favorite tip or takeaway. We'd love to hear from you. Until next time, keep hustling and making moves. See you in the next episode.